This is just test sound, test sound. Hello and welcome back to the Costing and Pricing Learning Program. My name's David Gilchrist and this is webinar number 14, Costing Practice, where we're going to have a look at calculating staff costs. Before we do that though, let's just run over some of the rules in relation to this webinar series and the broader Costing and Pricing Learning Program. This work is licensed, so it's able to be used by anyone and everyone for whatever purposes they need to help build capacity in the disability services sector. However, you cannot disaggregate these materials or present elements individually. So in other words, you've got to keep the logos and you've got to keep the materials intact. However, you are able to use them however you see fit to help build that capacity, as I say. In terms of navigation, the previous webinar was webinar 13, where we looked at costing volunteer time and donated assets. In this webinar, much more practically focused, we're going to have a look at the costing practice of calculating staff costs, as you know. But next webinar, I think, is also very important and germane to this particular webinar, because we're going to have a look at the NDIS pricing model. And the NDIS pricing model is important because that, if you like, is the assumptions used to, or represents the assumptions used to discuss and talk about pricing from the NDIS perspective. And therefore, if you're listening to this webinar, I strongly urge you to have a look at webinar 15 as well when we present that one. The learning objects of this webinar are really focused on payroll staff, finance staff and other people in your organisation who might be involved in the calculation of staff costs under an individualised funding regime. So this is not specifically NDIS, but more focused towards how do you arrive at a cost of service delivery for an individual who is at the, if you like, at the coalface for service delivery. As such, in one sense, it's a very specific exercise designed to look at one person in particular, but at another level, it's trying to, I guess, convey how you might go about costing and how you might aggregate costs at the end of the day. Really, it's an exercise in looking at the components of cost to make sure that you understand how you might approach each of those components and making sure that all the components are in there. At the end of the day, I think this webinar is one that you probably need to come back and review a few times over, because there are a number of complex calculations. A lot of different pieces of information have to be held in your mind at once, and I think an iterative process of coming back and looking at this is probably a really sensible way to approach this particular webinar. The issues, really all we're looking at here today is what do I need to do or to take into account when I'm costing staff? What kinds of things are in and what are not in that costing process, and how should I cost the elements associated with staff costs? There might be some other issues to consider which I'll deal with at the end of the webinar as well, but you need to think through what it is, or what it costs rather, to have an individual person at the coalface being able to provide an individual service or product. So what are the basics? I guess firstly, it's incumbent upon people to think about revisiting webinars 2 and 4. In webinars 2 and 4, we go through costing much more specifically and pricing, and we demonstrate staff costing examples in those webinars and also in the seminars focused on costing and pricing. Remember, this is relevant to the establishment of a cost and a price for each service. Therefore, the accounting issues relative to how to record and report on cost is a separate issue to that of costing, and is dealt with in those above 2 webinars 2 and 4. It's important to think about not just how you cost an individual, but also how you collect data in relation to the cost of that individual. So, what does it cost to provide a service? We're going to use the term unit of measurement throughout this particular webinar, and indeed we use that through some of the study guide. It is a term that is used to describe a particular iteration of service delivery under the NDIS. So a unit of measurement is the delivery of one service, whatever that service might be. We're concerned, rather than with costing and pricing, specifically with costing today, and therefore we're concerned to know what resources are consumed in providing a service, and that's always the basic philosophy of costing and pricing under the Costing and Pricing Learning Program. We are looking at those elements that are consumed in deploying one individual. How do we determine the cost of those resources is the next question, of course, and should that include resources that are not paid for? And this is a philosophical question, I guess, that we need to think about when we're talking about costing and pricing broadly in the not-for-profit sector particularly, but across the disability service organisations. How should we deal with donated assets, and how should we deal with the contribution of volunteers? Now, this particular exercise that we look at today doesn't contain any volunteer time, simply because we are looking at a particular individual. However, the risks of not contributing or identifying the contribution of volunteers in your costing and pricing at the organisation level include that you underprice because you are taking, if you like, advantage of what is essentially a free service, but you don't take into account, say, the risks of not being able to recruit volunteers in the future, or the risks associated with having to pay for services that were otherwise contributed by volunteers. I guess at the sector level, the risks are that you might be sending price signals to organisations like the NDIS that suggest that the prices should be lower rather than higher to take into account all of the costs. Therefore, when we make this decision about volunteers, as with the broader philosophy, if you like, around the Costing and Pricing Learning Program, we're very, very interested in what we consume to provide a service rather than what we perhaps draw cheques for or pay for in a physical sense. What about this particular case? This case is the second case in the study guide. So all of this data that I'm going to go through and also the calculations are provided in micro case study 7.2 in the study guide that is also available on the Costing and Pricing Learning Program website. This case is the case of the Retired Accountants Support Association, who provide home care services in the Brisbane metropolitan area. The base data that we're provided, so again, reiterating, we're looking to cost just an individual's service costs, if you like. So there's a whole lot of overheads and other costs that are not calculated or thought about in this particular example. We're purely looking at an individual who provides a service. The costing data, or the case data, is provided in this slide, as you can see, and importantly, the hourly rate that we're paying this individual is $14.50 per hour. The PAYG tax is $2.50, and you can see things like the superannuation rate of 9%. Now, through this exercise, we've used 9% because that's the same value that is used in the study guide. At the end of the day, really the rate doesn't matter. I know that it has risen since the formulation of this particular case study, but obviously you plug in the relevant rate into these calculations in order to determine the cost. Importantly, this staff member is entitled to annual leave of 4 weeks and also has an entitlement of 6 days per annum for sick leave. However, we're citing here that the average days sick leave taken across the organisation is only 5 days per annum. We have an RDO entitlement of 1 day off every month, and workers' compensation sits at 4%. This is a very arbitrary figure, and I'm sure it sits somewhere around 3.5 to 4.5 in your organisation. Service delivery units per day, or units of measurement, is 4. That is, we expect this particular person, if they're fully productive, they can deliver 4 iterations of service per day, and the working hours, to make the calculations relatively simple, are 8 hours a day, so this person is a full-time person. Long service leave entitlement is 12 weeks every 10 years. This person is entitled to a shift allowance of $40 per week and is also entitled to an on-call allowance of 5%. Now let's just go back to this data to make sure that we understand what needs to be included and what doesn't, because there's a couple of things that we need to talk about. Firstly, in terms of the PAYG does not need to be included and is not relevant to this particular calculation. It's there as a bit of a red herring, but we're not interested in the net pay to the individual, but rather the gross cost or the total cost to the organisation. The other element that we need to think about whether we want to take into account or not is the RDO entitlement. Now, when I get into a room and deliver these kinds of courses to a group of people, they have different views of RDOs. In this particular case, I've taken the view that the RDO entitlement is not needed to be taken into consideration in this case, in the calculation of the cost for this individual, because the person is entitled to an RDO given that they're more productive in the other times that they're at work. In other words, that the RDO accrues because they're working extra hours during the week in order to have that RDO off each month. If their productivity is not affected by the RDO, that is that they are truly being more productive in the days that they work in order to be entitled to the RDO, then we don't really need to take that into consideration. But I reiterate, a lot of organisations have different views of this, including that where an RDO is taken and you feel that the person does not necessarily achieve output productivity commensurate with that RDO, in other words, they don't make up the output in the other days, then it's important to cost that in. In other words, an RDO accrues because a person works extra hours during the normal working week. However, they might not necessarily get more outputs out during that time. And this calculation is very much focused on outputs. It's not focused on how many hours people might work per se, but rather how many outputs they can deliver during a normal working week. Let's take that data, and I'll just reiterate my initial comments in relation to this webinar. It will be, I think, necessary to come back and revisit this a few times for a lot of people to get in their minds exactly what this data means and how each calculation is made. But let's have a look at the calculations. Before we do that though, there is some variable cost calculation, or rather this is a variable cost calculation. In other words, we're really just looking at the direct services. As I mentioned before, the units of measurement are our consideration here, and we're identifying our units of measurement by reference to the total hourly cost for this individual. We mentioned before that the number of hours per UOM is 2, so a staff member can perform 4 UOMs, or units of measurement, per day, and we need to cover our costs over 48 weeks because 4 weeks per annum are spent on leave. In other words, the capacity that this person has to recover their costs is only 48 weeks in the year, not 52, because of that leave. As we mentioned before, the base cost is $14.50 an hour. Okay, let's calculate some of these cost elements. All of these costings are slightly different, so again you need to, I think, trip through each of the calculations to make sure they make some sort of sense to you. Our first calculation here is the cost of annual leave, and indeed the annual leave entitlement for the individual. As you can see, we've multiplied $14.50 per hour by 8 hours per day by 5 days per week availability and then 4 weeks a year, giving $2,320 as being the current cost of annual leave. Now notice that we haven't taken into account here any future costs, and so while the annual leave has been calculated to be included in the cost of service delivery, we need to be very, very aware of the risk that if this person doesn't take leave, then the cost of annual leave will escalate over time just because of natural pay rise for individuals that occurs in the Australian economy, and it won't be fully recovered at some future point. So managing the annual leave and long service leave entitlements is also a crucial aspect of making sure you arrive at the right cost contribution for annual leave. Not only do we have to work out what the total cost is for annual leave, but we also need to think about the productive hours per year. In this case, we have 8 hours per day, 5 days a week at 48 weeks per year, so 1,920 hours is our productive hours calculation. In other words, this individual has 1,920 hours during the year in which to be able to recover their costs. If we look at the cost component for annual leave, then 2,320 divided by that 1,920 hours available means that for each hour this person works productively, they must recover $1.21 in round figures, or $1.201 per hour as part of the annual leave cost. Let's have a look at sick leave. Again, the cost component here for sick leave is 8 hours per day times 5 days, which is the average taken, times $14.50 to give you the hourly rate of rate, which gives you $580 direct cost for sick leave each year. Now, it's important on two counts to think about this. On the first count, the sick leave assumption that I've made is that this person will only take 5 days a year, notwithstanding they're entitled to 10. So we're making assumptions as we go through this process, and you might decide that you want to make it 6 days to make sure that you're covering off the risk that on average people might take more time, or you might go back and look at what's reasonable given the history of your organisation. This is very subjective and it's different for each organisation, and you need to make sure that at the end of the day you feel comfortable that the time that you're setting aside or allocating for this cost makes sense from the point of view of your organisation. As with annual leave, we work out our cost allowance per hour by dividing the $580 by 1,920 productive hours per year, or 0.3021 cents per hour. The workers' comp cost allocation per hour is a slightly simpler element, where we've multiplied $14.50 per hour by 4%. That gives us a rate of 58 cents per hour for workers' comp cost allocation. Now that $14.50 again is a fairly arbitrary figure, and it depends on your workers' compensation policy and how you report and reconcile your workers' compensation from year to year as to what that $14.50 rate is. For instance, the workers' compensation insurer might require all components of cost to be included, such as your allowances for shifts or other allowances that might be paid as well. We've taken the view in this particular case that it's simply the hourly rate, that you need to make sure that you've got all of the cost components relevant to workers' comp in there. The 4% is also a very subjective element, and you need to go back on your history to see what that percentage is in relation to those cost components that are relevant to workers' comp. Long service leave costs we've calculated in pretty much the same way as we have for our annual leave, and that results in a 36.25 cents or $0.3625 per hour for annual leave costs. Again, the same risks apply to long service leave as they do to annual leave, in the sense that if you do not acquit annual leave quickly after it becomes due, then the cost escalates because of the natural increases in the hourly rates for people who are employed by your organisation. Shift allowance per hour has been included here too, which is a lump sum of $40 per week, which means that for $40 it is $1 per hour cost. So a slightly different calculation than the other calculations, but a relatively simple element to be thinking on. Let's have a look at our hourly on-call allowance. So the hourly on-call allowance is 5% of the $14.50 an hour paid to the individual, and so in this case it's a 72.5 cost allocation per hour. The superannuation cost is identified there. Again, we've used the 9% rate because this case was developed before the rate increase. However, it's simply a case of slotting the rate in. As you can see, we've assumed that pretty much all of the payments that are made to this individual are attracting superannuation costs. So all of the allowances, all of the leave provisions, as well as the hourly rate, giving us a total of $1.62.88 per hour for superannuation. When we come to look at the hourly rate, that is the hourly cost for this individual, we simply add up all of these costs to arrive at an hourly rate of $20.3064. So $20.3064 is the total cost per hour given the assumptions that have been made and the calculations that have been made and just demonstrated. If we look at that, we can't stop there though, because the hourly rate only gives us a cost of a particular hour. We now need to work out what the cost of service delivery is for each service iteration, each unit of measurement. When we do undertake that costing process, we recall that our units of measurement allow us, or cost us 2 hours per unit of measurement. Therefore, we're able to provide 4 units of measurement per day because we have 8 hours in the day. Therefore, the cost per unit of measurement for this individual is $40.84 or 85 cents, given that the individual is able to prepare or present 2 hours per unit of measurement. We've, throughout this example, costed to 4 decimal places. You need to think about whether or not that is going to be relevant. If you're a large organisation with many, many people involved, then costing to 4 decimal places probably is going to have a material difference on your costing outcome. If you're a small organisation, you might simply cost a cent, or you might actually only cost $2, because remember, we have to have a cost benefit in this process that allows the benefits of the costing process to outweigh those costs to ensure the organisation gets more benefit than cost in undertaking this process. There's some further thoughts that I wanted to also raise. Remembering, as per our previous webinars, costing is an iterative process. You need to recost regularly, and you also need to test your actual outcomes regularly. So when you look at costing, it's not a set and forget regime. You go through this calculation and then compare those costs, the activity, the experience that you actually had, as against your assumptions that you made in arriving at the cost. Probably in the early years of the NDIS, you need to do this far more regularly and far more completely than you might do in later years as you become more adept at costing and as your history becomes more well known to your organisation. Remember too that we cost to likely outputs, not capacity, and I think this is a really important thing for people to remember. We cost to what we're likely to produce as opposed to what, if you like, technically or theoretically we have the capacity to produce. And I think that means we have to go back to look at our history and to make sure that we undertake reasonableness checks of our assumptions and our calculations at the end of the day. For instance, if you have historically delivered 1,000 units of measurement in a year for a particular service, and your costing suggests for the next year that you can produce 1,200, you really need to come back and check the reasonableness of that idea to make sure that you feel comfortable that in fact what you've done will change things sufficiently to be able to deliver you with that level of productivity. I think that often we get sidetracked, or we get start to believe our own hubris in the costing process. We need to always check that back with what is actually happening and how things are actually working in our organisation to make sure we're comfortable. That concludes our look at the costing for an individual. As I mentioned before, I think this is a webinar that you might want to revisit and come back to on a fairly continual basis to make sure that you feel comfortable with the calculations that are made and you understand the assumptions that have been made arriving at these calculations. Different organisations can calculate these things in different ways. They can make different assumptions that suit them better, and you must be convinced that the assumptions you made make sense from your organisational perspective. I look forward to talking to you in the next webinar, and I hope you found something useful in this particular webinar. All the best.